Hi traders, Nathan Bray here from ACY Securities. We've got an immense amount of data coming out this week, things like interest rates and employment data from some of the major currencies and economies around the world. So we're going to be seeing data come out of Europe affecting the pound, also the US towards the end of the week, as well as their own FOMC meeting. But right now I'm focusing my attention on New Zealand. We've got employment data coming out tomorrow morning Sydney time. So we've got predictions coming out on ASB and ANZ suggesting their forecast is for unemployment rate to actually drop down to 3.2%. However, the acting chief economist from Westpac is saying it will stay where it is at 3.3%. Now, this would bring it to a level we haven't seen since the 70s. It's a very tight labour market and employment market in New Zealand indeed. So when that data comes out, I'll be looking at key technical levels. So this 65-cent major monthly resistance, major daily and weekly resistance levels is where I'll be watching to see how the market reacts to that data. Now, to get a quick analysis, we're going to cross to our own chief market strategist, Duncan Cooper. Hi, Duncan.
Hi Nathan, so ahead of tomorrow's unemployment data, the New Zealand dollar, it's trading here at 64.68 weekly resistance and 65.13 weekly resistance. Over the last 2 weeks, we've tested and failed at 65.27 monthly resistance. So are we reversing at major resistance here? Are we forming a double top here on the weekly chart? Alright, let's drop down to the day chart and have a closer look. Now last week I told traders to watch the 6500 level. That's been strong resistance and we did reverse and fail at that level last week. Now when the data comes out tomorrow, we may well see a last run up to 6500 intraday before failure and a move down. We've already started to form a lower top here, so the data release may create volatility. We may get a spike up to 6500, but after that we'll look for an opportunity to sell for a move back down the range in line with that lower top forming. And over the next 3 to 6 months, if the data remains poor for the New Zealand dollar, we may well see a decline all the way down to retest last year's low. Last year's low is at 55.11, and that's a long way away, but at the moment we could be forming a double top here on the weekly chart, and if we are and we start to reverse, we could see a long-term decline.